All right, welcome back, traders. John Caruso here. It is Tuesday morning, approximately 7:30 a.m. Chicago time. We are going to do a quick market insight video for everyone, go through a couple charts with you as well. So jumping right off here, we're going to take a look at some of the overnight market risk. We did hear from the Chinese real estate developer Evergrande that they potentially cannot meet offshore debt payments. They are warning of a default risk. Right now, China also mulling a new stimulus and higher deficit spending to achieve growth target. Goldman sees risk in the 60-40 portfolio going forward as the growth outlook worsens. And of course, we do have the ECB's President Lagarde, Christine Lagarde. She does speak shortly. Actually, she might be speaking right now. And then, of course, later on today, we do have the Fed's Kashkari and Bostic, which are set to speak today. So we're going to run through a quick 4 or 5 charts with you as well. First off, we got the S&P 500 up on the chart up here. We clearly have seen this base that has built in here. We did have the gap down yesterday or Sunday night off the Middle Eastern tensions, and then we did see the bulls wrestle the ball away from the bears, and we finished higher, upwards around 43.65 yesterday. Currently trading 43.69. I still remain negative on this market. We did have some pretty nice bear side strategies to capture this move from the beginning of August all the way to date. And we think now is probably a pretty good time to start resetting some of those bear side strategies. As you can see over here, the last video that we did when we were getting down into these support levels in here, we did bounce off the 200-day moving average. We were expecting a chop to the upside in here, and we didn't get a chop. We got pretty much a pretty straight up move here. So maybe we get some consolidations over for the next we'll say 5 to 8 days or so in here before ultimately we see more risk off come back into the market. Now, whether we take out these lows, that remains to be seen. I'm actually skeptical because this does kind of look like a base, but I do think ultimately we will get back down and retest that 4,300 level, potentially as deep as about 4,270 one more time. And that would just come on a pretty traditional pullback in the market from immediate term overbought signal that I'm receiving right now. So negative bearish trend when we broke this swing low over here. Negative momentum clearly set up on the chart, and I do have an immediate term overbought signal up in here. So I am expecting some downside over we're going to say the next 1 to 3 weeks in the S&P 500. Then ultimately we do think we're going to get into a better period going out into the end of the year where we could see some upside chop. But as far as how high we can get, I don't really see runaway prices on the upside in the equity markets right now. And ultimately we could just ultimately kind of settle back into this trading range up here. You know, maybe about 45.50 on the high end and maybe about 43.50 on the low end going out into the end of the year. So that's a quick look at the S&P 500. We're going to jump over, take a look at the bond market. I'm going to take a look at the 10-year notes. 10-year notes got a similar base that's developed in here. We are getting some downside here this morning. Of course, yesterday the bond market was closed. Futures were open, and we did see a pretty strong move in the 10-year note futures. They were up about 28 points with the cash market closed. Now, it does look, now that we've kind of, picked our head up in here in the bond market, it does look like we're going to see this probably pull back down. Whether we can hold, maybe fill that gap at 106.24 and then move back to the upside going out into the end of the year. I do think that could be the highest probability for this trade going into the end of the year. But ultimately, we still think the bond market is in a lot of trouble. The Fed is still obviously having some trouble fully extinguishing inflation. We are going to get some inflation readings on Thursday. So buckle up for CPI coming on Thursday. Expected 3.6 year over year and up 0.3 month over month. So ultimately, I think we are going to pull down in here again. We did get an immediate term overbought signal yesterday. Another pull down, maybe another better period going out into the end of the year. But ultimately, we do think the bond market has not yet seen its ultimate lows. And there are more lows coming out into 2024. So that's a look at the 10-year note. We're going to look at gold. Gold got blistered in here, dropped $100 inside of about 5 or 6 trading sessions. We did have a strong bounce last Friday. We did see some follow through with the gap higher off the Middle Eastern tensions last week. And we are actually starting to see that pull down a little bit in here. So hit some resistance, immediate term overbought in here. Maybe we get another pull down in here, fill the gap, and then we get a better period going out into the end of the year. But ultimately, gold is going to trade. It's carrying an inverse correlation, obviously, the U.S. dollar and the direction of interest rates. It's carrying a positive correlation to the stock market. So if I do see some risk off in stocks, that means I'm probably going to see some risk off in the gold market before we get a better period going out into the end of the year. And that's a look at December gold. Lastly, we're going to take a look at crude oil. November crude oil, similar action to gold. We did see the gap higher in the Middle Eastern tensions. Markets starting to kind of back and fill a little bit in here. We're going to see what happens in here. The top of my range, I was getting lower highs were registering on this 13% move lower last week. It's now popping back up towards 95. So maybe we get some chop in here before we get an ultimate resumption of the trend back to the upside. Now, what I think is going on in crude oil is I just think ultimately, let me see if I can scale out here. So if you can recall, going back between the end of last year and we'll say the end of July, we ultimately settled in this wide trading range. Now, what has happened is we broke through that trading range all the way to the next logical resistance area, which was around 94, 95. And now perhaps what used to be resistance here, this past peak, is now support. Now we might just be unlocking a higher trading range in crude. So 94 to 95, top end of that trading range, down low end of that trading range comes in about 83, 84. And we might just settle in that range for a period of time going forward. So that is ultimately a look at about 4 or 5 markets. Hopefully that gets you off on a pretty good foot for the day. Best of luck to everybody out here. We'll catch you back here next time.